Good morning, everyone, and welcome to the weekly fundamental podcast. I'm Rusmik Oza from Kotak Securities. On the international side, most global markets saw correction last week, with the S&P 500 falling 1.4% and Dow Jones falling 1.1%. Tech stocks led by FANG saw further erosion as Nasdaq Composite Index lost 2.3% last week. Last week, Taiwan announced plans to restrict public gatherings after witnessing fresh incidents of COVID infection. The concerns of COVID and unwinding of leverage trades led to a sharp fall of 8.4% in Taiwan's market last week. Singapore and Japan markets were down by 4.6 and 4.3% respectively last week, as they also saw fresh resurgence in COVID cases. Overall, the MSCI Emerging Market Index lost nearly 4% last week. The Chinese manufacturers have now started to pass on the rising input cost to overseas customers. This is causing inflation to rise in developed markets. The concerns of higher inflation is impacting growth and technology stocks the most in the interim, as their valuations are rich, factoring in high future earnings growth prospects. Somewhere expensive growth stocks are sensitive to higher interest rates. So that was on the international front. Coming over to India, the Nifty-50 was down around 1% last week as markets are worried about risk from rising inflation globally and extension of COVID-19 restrictions in various states locally. The broader market sustained as the BSE Mid-Cap Index and the BSE Small Cap Index declined by just 0.5% and 0.08% respectively. After consistent rise, the BSE Metal Index fell by 4% last week. The BSE PSU Index was up 3% last week, led by gains in names like Coal India, IOC, Power Grid and NTPC. The rating agencies are reducing India's GDP growth estimates. The ongoing second wave might result in FY22 GDP estimates getting reduced to single high digit from the double digit growth expectations that were made at the start of this calendar year. Economists expect the threat to GDP downgrades to continue and persist for some more time till we reach herd immunity. On the flows, FIIs remained net sellers last week also, with month to date selling off around Rs 8,700 crores. The DIIs have been net buyers, but their purchases of just 891 crore this month to date is quite minuscule. Most emerging markets and Asian markets have seen FPI outflows this month to date. Amongst emerging markets, South Korea and Taiwan saw highest month to date FPI outflows of $6 billion and $3.9 billion respectively. More than the COVID cases, the focus of investors is on the vaccination drive. As per experts, herd immunity could develop if 70 to 80% of the population get vaccinated or develop herd immunity by getting the virus. As per the assessment given by Dr. V.K. Paul, the member of Niti Aayog last week, there could be more than 200 crore doses of vaccine available in India between August and December. This provides some ray of hope. Unlike last year, the widespread impact of COVID in Tier 3 and Tier 4 cities, semi-rural and rural areas, all put together could lead to slowdown in consumption in the near future. Another point to highlight is that unlike last year's complete lockdown, this time factories are working with lower demand and consistent overheads. This time the commodity prices have also gone through the roof, unlike last year when the commodity prices had collapsed due to the global impact. We expect margin squeeze going forward for most of the manufacturing companies, especially in Q1 and Q2 of this fiscal year. Unlike last fiscal year, the first half is going to be a challenge for corporate India. There is hope of a strong recovery coming back in the second half of FY22, provided we don't see any third wave. Investors are expecting the second wave to be short-lived and building in a recovery scenario for second half of FY22. Hence, local investors are behaving patiently this time so that they do not miss out on the recovery phase. The official figures of new COVID cases has come off from 4 lakh to 3.11 lakh, which is a good sign. The ongoing result season could continue having stock specific impact as more than 170 companies declare results this week. Among the frontline names, Bharti Airtel, SBI, Tata Motors, JSW Steel, IOC, and Shree Cement will come out with their results in this week. On the market, if you look at the maximum call interest and the maximum put interest, it still signals a range bound market for some more time. The maximum call interest is at 15,000 level and the maximum put interest is at 14,000 level. The disconnect between GDP growth and earnings growth could continue for some time as the organized listed companies grab more market share from the unorganized players. One needs to keep a tab on the possibility of any third wave because that could derail both GDP and earnings growth. Looking at the input cost pressures and impact on demand in the near term, we expect manufacturing sector to get negative or to have a negative operating leverage at least for the next 2 quarters. In this scenario, the defensives could continue to hold their guard and trade at higher valuations leading to near-term outperformance. However, long-term opportunity still lies in economy-driven sectors. The near-term underperformance of economy-driven sectors could offer good buying opportunities on dips. The export-driven companies, however, could turn out to be evergreen in terms of performance because of the faster recovery being seen in the developed markets and developed nations. Few themes or sectors to focus on are one, tractors, where escorts is looking good. Housing finance companies, where HDFC is quite adequately placed. Infrastructure spending, where L&T is a top pick. Revival in construction activity, where we like PNC Infratech. Higher penetration of insurance, we like SBI Life Insurance in this space. Privatization theme, where BPCL is a good candidate. Higher IT spending globally, where Infosys looks as a good candidate. And lastly, revival in consumer spending, where we like retail companies, and Aditya Birla Fashion looks quite attractive in that space. So that's it from my side for this week. Thanks everyone for listening to this podcast. Have a great week ahead.